This is
This
Brett Fogle,
conference will
and
now
this
be
week's edition
recorded.
of TA here on Max's channel. And if you haven't already liked and subscribed, go ahead and do that right now. We've got a lot to cover here, and we're going to go ahead and dive right in. Of course, the big news this week, July 14th, is Celsius has finally declared bankruptcy. Everybody knew this was coming, but what I think is coming next is a fear cycle to really flesh out more weak hands. And we have some other news here I'll just touch on briefly, and then we'll dive into the charts. So here we've got news from Bloomberg saying the Fed could dive in with a historic 100 basis point rate hike, which should, of course, cause more fear, more panic, more capitulation, and more downward pressure on crypto, which is what I've been saying all along, is that we're going to be heading lower here. And then this quick news bite here, the U.S. inflation quickens to 9.1%, amping up the Fed pressure to go big. So what could really send this all into the toilet, both US stocks, equities, and crypto, is if they surprise us with a 100 basis point hike, because 75 basis points already been factored into the market. The markets don't like surprises, so we'll see, and we need to be ready for that. I don't think we've put in a bottom yet, and let's take a look at why that is. All right, jumping to the monthly chart. Always good to look in the longer time frames. When in doubt, zoom out. And so as we looked at last week here, this is the chart of Bitcoin over the last months since the beginning of Bitcoin in the last 3 market cycles. So we saw in previous market cycles 85% corrections from the market cycle peak. We saw that in 2015 all the way down here to this blue line here, which is the 50-month moving average. You guys can easily chart these on your own charting systems, whatever you might be using. And so I have got the 20-month and the 50-month in blue and the 100-month. So will we go to the 100-month on the monthly? Don't know yet. And actually, yeah, so let's just dive into this a little deeper as possible, and we'll look at the weekly chart as well as we did last week. What is new though, and I'll just touch on this again, an 85% correction from the top to the bottom, 2015. And I'm looking over here on my left monitor here, that 86% all the way down to that 50-month, but after surprising everybody at the 20-month. So we saw that happen here and here, going down 84%. And then I've drawn this as a speculative bottom here. If we do go down another 85%, and again, we've got historic inflation, we've got money printing has gone back to zero, so we've got to deleverage this market. The global economy injected 35 trillion, give or take, into these global markets. So it's going to take some time to deleverage that and have that money come back out. So I don't think we're finished yet. And then all these other fears with the economy and wars, etc. So if we, with all these things combined, it adds to the likelihood that we'll see at least an 85% correction, and probably, maybe a little bit more. So this 100-month moving average here, if we were to come down to that level, and also this support resistance area all the way back from June 19th, if you can see that, came right up to this level around 10,000. So bear with me here, 10,000, so maybe you just had a heart attack, but it rejected, came down, and then pushed up through 10,000 and found support. Well, there is some indication we could come back down there and maybe even just below that. We're going to look at the CME index and the CME gap. There's one right below 10,000, and I think that's going to be a pretty good place. Start looking for a bottom. But it is also possible that we come down where we are right now, right at 20,000, and see this chart pattern here, this blue bar overlay. So I borrowed that from a prior cycle and just overlaid that on top of that. So if we look at this, kind of looks like this back in the 2017-18 range. So we could still see that. There are some similarities to that, and that would put us sort of right at around where we are. So we want to kind of watch for this kind of a bounce on 20,000, but I would imagine it would be some kind of a bull trap, and then we would kind of continue at least to retest 20,000 or come back down lower. But on the weekly, again, we're going to look at why we could be coming back down in this 10,000 range. And you see this green box I've drawn here as a good opportunity zone. Let's just call it that. Won't make buy or sell recommendations for you guys, but let's call it an opportunity zone. So let's jump over to the weekly here and to see why that could be. And on the weekly, I've got the 200, 300, 400, and even the 500 weekly. Let's see, double check this here. I've got the 200, 50, 100, 200. All right, so the green is 100 week moving average, 200 and 300 week. moving average. I had actually drawn a 400 week on a different chart, but we're not there yet. But in terms of where we could go and what that would look like, let me just pull this up and turn that back on. May need to redraw that particular one for the 400 week. So let's just go ahead and do that, because where we are now is just above this 300 week here on the red line, and I can turn that on or off so you can see that. And that's again the 300 week moving average. Now I thought I had a 400. No, I do. I've got a 400 on here. It's just not showing up for some reason. But the 400 week is going to be down here right around 12,500. So that's kind of where I'm seeing things going down to. First, we would hold around 16,700. It was my predicted back in May that we would go up to 32,000, down to 22,000, and then drop to 16.5. The first two played out. 16.5 was back in here, so as it rises up, we're just right in here about 16,800, maybe even call it 17,000 as that moving average rises up. But we are in kind of a consolidation pattern right now at the moment. If we pull up the stochastics RSI, though, is interesting. We're seeing a little bit of a bounce here on that. So I do believe we could see a bull rally here, and it will be probably short-lived. We'll look at the DXY and USDT dominance here in a moment. But as we can see in the history, it tends to double bottom on this. It does look like we're getting a bit of a bounce on that stochastics RSI, and they generally have some follow through. So it looks for some signs of strength into this week. We just want to be really careful going long on the market in general. That's just an early clue that could be getting a little bit of a bounce here. Again, I would expect it to come down to around the 17,000 level, 16,700, but right around 17,000 is that 300 week moving average. Okay, so in terms of the 400 week, I'm not sure why it's not showing up here, but that would put us down around 12,500. So that would be my next level of support, followed by right around that psychological level at 10,000 that we just looked at. So let's take a look at the CME gap here, because we have seen these coming back and filling. It's an old, always has happened in the stock market. And so looking back over the last, let's see, we can do it on the daily also, but just for simplicity, back here, see this circled gap here. This is the only unfilled CME gap. And this is a weekly chart, so which makes it a bigger gap to fill. On the upside, we have one right here. So ultimately, we will come back up, and for other reasons of not just the CME gap here, but you can see that that's another case that we'll get a bounce here at some point up to 28.5 and then higher. But this is the one to worry about right here. After the COVID crash, we had this big drop and then this big kind of cup and handle breakout. You see this beautiful cup and handle breakout? There's the cup, there's the handle, and then we shot up right there. But we have still this CME gap here in the small circle that would need to be filled. Technical analysis experts would say, and there's reasons for that we won't go into, but essentially they can hold positions for long periods of time. And even though the CME didn't, they could find a way to not take a loss on that, and then later on drive price back down into these ranges to fill the gap. A lot of reasons, a lot of hypothesis on this, but it does seem to play out. So that would put us right here at 9,700, call it 9,750. So what I expect is with further weakening in the markets. Now this could play out over the next 4 months. I think the bottom we'll probably see, it'll get stretched out into November, December, and there's some reasons for that we may not have time to get into, but just keep an eye on this. So if we come down to 10,000, it will certainly see some kind of a bounce or a capitulation. If we break 10,000, likely that's when panic selling will kick in and people will be throwing in the towel, which usually marks the end of market cycles, along with huge bankruptcies of big companies like Celsius. So Celsius may be the first. There may be a few other big ones in line to announce, and of course, Three Arrows Capital, a big one. Can't find the guys, they've disappeared, and because they owe a lot of people a lot of money. I think there's more exposure to Three Arrows Capital that hasn't come out yet, and we'll see it as markets push lower. So sorry, I'm going to jump back here to this weekly real quick. So with that, that's what I'm looking for in this case, and then coming back down in this 16,500 range. So well, let's jump to the daily and talk about this a little bit. So again, I had predicted back here on May 19th when we were flatlining a bit that we'd push to 32,000 and then drop to 22,000. So that those have both played out. And then the next drop here, 16.5, for reasons we just looked at, and then it's anyone's guess. Okay, so I want to stay, now is not the time to FOMO into these markets. It's not a time to be jumping in with both feet. Definitely some downside potential still to be had. What we'd also want to look at here is let me just jump to a different list here. We'll look at the DXY. This is interesting too, because the DXY has been hitting kind of local highs here. It broke 108, which I had my alert set, and I thought, hey, you know what? This is pretty high. We may kind of roll over here on the DXY and having a little rally in Bitcoin because they're inversely related. But let's kind of zoom out on this and take a look at the DXY. If we look out far enough, and ignore these blue lines here for a minute, if we look out far enough, and may need to kind of go to a 3-day just to get it zoomed out a bit. But you see that the highs really are back in this 120 range on the DXY. So, and again, there's another beautiful Coppin handle here that you can see. Again, when in doubt, zoom out. So this huge Coppin bottoming pattern on the DXY, followed by some sideways consolidation, and then that handle breakout here. So that concerns me a bit in terms of dragging Bitcoin much lower, as we just talked about. So while and concerns in that the price would go down, but also in a confirmational way of that scenario I just laid out. So here, as DXY pushes higher here up towards 120, and again, I'm going to delete this blue pattern here for now, and then we'll add it back and I'll explain this. So the near-term danger is this thing, if it pulls back a little bit, then that would explain a Bitcoin mini rally followed by a bigger dump on Bitcoin as the DXY bounces off this lower trend line here and breaks higher as that handle breakout of the Coppin handle pattern. Where would it go? Likely up into this 120 range, right? So this would have been the last time we've seen prices that high back in 2002. And if we go even farther out, it's been higher, back into the 80s. So now crypto's not been around that long, so we don't need to go that far back. But these are the things to be watching out for. And of course, the DXY could, if I overlay this blue chart here, that let's see, I'm going to go back one more step, and there, this thing. So this is a copy of the chart pattern back in when it really took off in this range. And so it's these patterns can play out in a similar fashion. So this would drive it up even potentially back into the 150 range. Huge. This would drive markets so far down that there would be blood in the streets, and people would be selling at all costs. Now, why is that a scenario? Not to be a fearmonger, but again, record inflation since we haven't seen since the 80s, and that's where these patterns were last at these prices, or pushed up this high back in the 80s. So what do I really think? I think we'll probably head lower. If we do see a push higher on Bitcoin and the overall markets, it'll be met with, right now we're oversold. We'll see some kind of a relief rally at some point, but I think it'll be a bull trap, and then we'll really see things crash and come back down and put in lows around November and December. So some other reasons for that, just in terms of math on all of this, I'd have to pull it up here. But in terms of the halving and where these things usually bottom in terms of the cycle, that would put us at right around that time frame of a bottom. Let me just jump back to Bitcoin here, where we would not see a bottom here until we were into kind of the end of the year. Let's get closer to a daily, see if we can push and extend that out. But just a very simplistic diagram too on the daily. I think we will. Here's the thing: we have a bearish descending wedge on the daily. So either we push up a little bit, again, back up in this $22,000 range, and that would allow the DXY to pull in a little bit, right, and then bounce off that trend line. And if this is all Chinese to you, forgive me, but this visual really sums up where I think we're gonna see play out here. So a bounce up into this range, either a breakdown right from here and then kind of pushing down this bearish wedge pattern and descending triangle into these lower buy zones. So opportunity zone, buy zone in the 12,000 range, but still big possibility we break 10,000 and go down just below it for that CME gap. But in terms of I tell you what I'll do is I'll post in one of the comments the details on what I was talking to you guys about here in terms of the Bitcoin halving cycle and how many days, but that would push us out to seeing new all-time highs right around 20,000, 2024 end of that area. So, this is going to take some time to drag out and draw out all of the deleveraging in these global markets. It's not going to happen overnight. If we wanted to quickly look at the USDT dominance here, which I had drawn last week, a big question mark here. So this little bounce pattern that I had drawn on this is on the daily, so is playing out exactly as we had it, kind of a bounce off this mid trend line. So as USDT dominance goes higher, again, that's money coming out of crypto, coming out of Bitcoin, going into stable coins like USDT, and that pushes the USDT dominance higher. This chart here, if you're new to the channel and weren't with us last week, I'd predicted and shown this bull flag playing out, which as USDT is bullish, overall market bearish. But this is a bull flag, apologies. Here's the flagpole flag, and then we saw that play out beautifully to the upside as we saw Bitcoin come down lower. So I don't know, I think this is likely to, in this range, will push higher on USDT dominance, more money flowing into USDT as it comes out of crypto and the rest of the market here. And let me just dig around and see. I do want to share that with you on the, I just posted to one of our private groups here, and may need to dig around for that. I'll get that into the comments below. What I'm talking to you about is the timeliness on the halving, etc. So actually, let me just skim a little bit more on that and see if I can find it, because I didn't think I'd go in this direction. But certainly, if you have any questions, go ahead and post those down below, and we will answer those. I will answer those personally as best I can. Subscribe to the channel and like the video if you like what you're seeing here. I will have to find that specific timeline to share with you guys on the Bitcoin halving and this overall cycle. But in reality, I trade what I see. Show me the charts, I'll tell you the news. I'm a big believer that everything's priced in, or the majority of news, whether known or unknown, is priced into the charts. And that's where I will plant my flag and rely on those indications. And so with that, we take a quick look at Ethereum, and then there's not much else to see here. We are down 500 for the day on Bitcoin. I think Ethereum probably going to bounce around in this liquidity zone as we saw back in early 2021. And then when we do break lower, and if we see a market capitulation, I have my buy zone. This is not a recommendation for you to buy. This is just my buy zone, where we had a liquidity zone back in early or late to November of 2020. So essentially, that's where we saw some great buying pressure before it took off on the upside. Essentially, if we break 800, 900 on Ethereum, I think we'll drop to the $500 to $600 range, sometime this year, and that'll be an excellent buying opportunity if for buying and holding Ethereum. Personally, I'll be loading up on my IRA around those prices. Of course, new information equals new decision. So if we see this whole world conflict really get bigger and worse, and the economy is starting to collapse in the global economy, then I would wait until we see some signs of strength. Never try to catch a falling knife. Quickly skimming over these for any positive performers. I do like to look for strength when the markets are weak and keep an eye on those. So we have e-gold up nearly 5%, but really not the pattern on e-gold. This is a little bit of a bounce. I think we still go lower on these, and we will start seeing some excellent buying opportunities. Let me turn off my radar indicator here, and on the way up, and tradable bottoms and tradable ranges. So, and that with that, there's everything else is down in red. I wouldn't be going into anything kind of heading into the end of the week and the weekend. It's not yet time to be buying, my opinion. Polygon Matic, a little bit of a bounce here up to this range. I think these are resistance areas for these. So I would imagine many of these, including Polygon, coming back down into these liquidity ranges where previously they were under accumulation. These accumulation areas are the best times generally to buy these projects. And so I would like to see it consolidate. If you're a Polygon fan, see it consolidate here between 30 cents, 45 cents range. Good area to start accumulating some of these projects and keeping some powder dry for the possibility of a much lower, overall total market cap. We can pull that up really quickly. And again, we can see these ranges and these round numbers. Total market cap shot right up to $3 trillion, just broke 3 trillion. And that was the top. So we broke down, sold off considerably down to 1.5, lost half of its value in the crypto markets, and then a bit of a bounce to 2.2 trillion. Point is, these liquidity ranges, we are in one right now, so we can expect to see money flowing in and out of crypto for a bit, but watch this range to break. If we break below 800 trillion on the total market cap, similar to Ethereum, I have the next liquidity zone down here between 500, 600 trillion will be, in my opinion, the bottoming range, and it'll take some time to play out. Again, deleveraging as that a lot of the borrowed money and that came into these markets, because let's be honest, a lot of the printed money that not only in the US but globally went into crypto. In the US, a lot of the stimulus went into the stock market. So we're seeing a lot of that pulled out, seeing all this leverage investment really getting flushed out, which in the long run will be healthy, although it's a bit painful for us right now. So that's all I have for you guys. Again, I will post the in the first comment once we get the video posted. I'll put the timeline of the halving of Bitcoin and why I think we won't see a bottom here until toward the end of the year on Bitcoin and the overall markets of 2022. And then I think that that would put us down right around in here range time-wise. So if we moved it time-wise around this November, December range and around the 10,000 to 12,000 area. That's my prediction, but nobody is perfect, and but been pretty much accurate so far. So we're waiting to see this play out. Feel pretty strongly. So if you like the video, go ahead and hit the like button and subscribe if you haven't already. And then again, I'll post that timeline here in the comments of where I think we'll bounce time-wise and when we'll hit a new all-time high in the next couple of years after the halving. So thanks very much, and we'll talk to you again soon. See you next week.